Hey folks, and welcome to this symposium on the 16th of January 2023. Today I'm just going to show you the results of a recent study that I did where I wanted to understand the difference in the price of assets and time frames when they are ranging in contrast to when they are expanding or trending. So I wanted to understand the relationship, more specifically, how much of the time is the price of an asset ranging and how much of the time is the price of an asset not ranging or expanding. Okay, and so I wrote a very simple program that did this, where it looked at the price of all assets on all time frames, and it would look for prices to be going like this and then do something like that. Okay, and so of course each candle has a wick, look like this. And so I wanted to know when close values would exceed previous highs and lows. Like this candle, the close is here, the previous low is here. So this candle here qualifies as an expansion candle. These are ranging candles. This is an expansion candle. E and R, ranging, expanding. So what the algorithm does, it runs through, for this example, 12,744 5-minute candles. It counts the number of ranging candles and it divides by the number. It takes the number of candles that break away from a ranging candle and it divides by the total number. And this gives us a pretty good indication of the relationship between these two states. And you can see they're very equally or perfectly distributed on the 5-minute chart for this asset. So this is very, very interesting. Okay, and so I ran this on everything. Okay, we have the Australian dollar monthly chart. On the monthly chart, my broker doesn't have a lot of data. We only have 276 monthly bars, which is a very limited data set. But if we go down to the 1-minute chart, well, then we have 55,183, which is a really big number, which is a really beautiful number because this is going to give us more data. We're going to have a lot more calculations to do, and this is going to give us a much more realistic view on the relationship between the ranging candles in contrast to the expanding candles here. Okay, and so here we have 52% ranging candles on the 1-minute chart, 48% expanding candles. And when prices are expanding, they are expanding on average 210% times the previous candle that was ranging. So in my little illustration here, you had all the candles moving sideways, then we had the candle that left. The candle that left has the range that is 210 times greater than the candle directly previous, which was the last one in the range. Okay, this is super interesting, very, very interesting. And what we could do, we could expand this study and we make it a little bit more accurate where we go in and we count how many candles prior were ranging. We take an average of those and we use that average and compare it to the expansion candle just to get a little bit more of an accurate value for that. But this is tremendous. It's really big. It's 200% almost the size of the last candle in that range. That's a very explosive move. Okay, and these numbers are normally big because when they finally do break out, they really break out with force, as you can see. I mean, an average, I think we could say the average is probably 100 and 170%. That was a big one. 188, 199, 235. And so I think an average of all of those numbers together, we're probably looking at the high 160s, 170s, which is big. Okay, and so what does that mean? That means that when prices do finally move out of the range, it gives you an indication of how far they're going to go. Okay, so if we look at this one here let's say on the 30-minute chart here. So if we have, of course, and this is an average, we've got the candles here, they're doing this, and we have the candle that goes like that. Okay, so when prices do finally break out, it's going to move on average 180% of the range of this candle. Okay, so this candle here is 180% times greater than this candle here, which I think is a very, very fascinating study. Anyway, so that's a very interesting study I've been doing. I'm probably going to expand on this study and add some more metrics, maybe the ones that I mentioned earlier. But I think that there's a lot of room for to increase the quality of this study, but also incorporate more information that could actually be used for something useful like targets and whatnot once we see these breakouts. Because essentially a breakout like this, I mean, this would typically qualify an area of supply and demand, and it gives us an idea of how far prices are typically going to go. So that's very interesting. But if you have any input, if there's anything you want to see in this study, please put a comment below and let me know. Okay, thanks for watching. Bye-bye.